Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Monday. Wow. I see already a lot of people confounded by this market, trying to figure out what's going on. Remember, orders are what moves markets, and there's a lot of money that has to be put to work out there, even if it doesn't necessarily in line with what we think the markets are going to do. By the way, I got my things seem to be a little messed up. I think I'm going to go to there. That's a little bit better. Good morning, Radoslav. All right, so key amongst the confounders this morning is the 10-year Treasury. Let me center that a little bit. We're having a pretty good up move, breaking all sorts of key levels to the upside here in the Treasuries to start the week. But remember, tomorrow we got CPI. I know everybody seems to think that CPI is just going to be okay. But the other thing is today we've got an 10-year note auction. We got about 30 billion for the market to absorb today. So that is also going to be a big factor. S&P 500, while it's looking okay overnight, but it's kind of starting to move to the downside. Oil may be recovering here too. Natural gas is seeing a big spike down this morning. That's curious. And metals making a run. Silver in particular. Ooh, silver looks really nice, breaking out some of those key levels. And then we got copper. Copper's still kind of going sideways, but it's starting to look like it catch a bid. And the market may be turning for our friends in copper. And then we got the bitcoins. Bitcoins completely recovering from that big bounce, and we're only days away from the Ethereum merge, and the dollar is a little bit weaker today, all the way back down to 108 after being almost at 11 or 111 last week. Didn't quite get there, but it came close. So that's where we're at this morning. Nothing significant on the calendar here up until 9:30. So this is one of those days that I might be a little bit more cautious. But since we do have an auction, that's going to that should provide some small little opportunities for us. We'll see which way it goes, though. Maybe they want to buy it. Maybe they want to buy it. Oh, by the way, we need to turn on the X feed here. In fact, I can just figure that one to connect on startup. Okay. Yes, sir, and that gives us Apple. But for now, let's keep the S&P 500 up, yeah? Apple was really interesting on Friday to me because it was selling volume in Apple pretty much the whole day, but it still stuck with the index. So that was very interesting to watch. All right, so let's come over here, check TweetDeck. Joseph Wang, new paper suggesting a link between the US dollar strength and tighter domestic credit conditions. Strong USD is linked with less secondary market demand for loans and thus less origination. Well, you kind of got a chicken and egg problem there, though, but that one definitely seems to be in line with what I've seen. I have been a close observer of energy policy in Argentina for nearly 20 years. What I see now in the EU brings to mind Argentina's responses to high energy prices and shortages, a thread to warn you what can happen when politicians take over energy markets. Of 1, politicians protect voters/households from consequences of bad energy policy, preventing demand moderation. Price caps and subsidies to household, limiting supply to industry, whatever they have to do to keep voters' households' energy supplied and costs low. Utilities and transporters get squeezed. The profits estimated through price caps and regulation, eliminated through price caps and regulation. Shareholders and creditors of utilities and transporters are left out in the cold. CapEx eliminated and OpEx slashed. Energy infrastructure does not grow and is frozen. Maintenance CapEx ratcheted back, as is OpEx. Initially, the system continues to function, but over time, lack of maintenance CapEx sees regular energy infrastructure system failures. Good morning, Mustafa. Energy left short of energy and political lobbying favoritism determine who is supplied, and politicians are incentivized to keep voters happy, so households come first. Capital in critical industry like power plants and hospitals have a good claim to be supplied. After that, it's political. Buyers and importers of energy become less creditworthy, so they must provide more credit support and pay higher prices to foreign energy producers to obtain supply. Government support for energy importation becomes vital. Who can obtain such government credit becomes political. Exports of energy, gas, power, liquid fuels, coal are reduced or eliminated. Neighboring countries and trade partners are left to share some of the suffering. Political control of the energy sector, bad reactive energy policy, and low returns lead energy companies and investors to avoid investing in the country, and investors are local players connected to politicians. Omar, good morning, guys. Reading a thread here on Twitter about what happens when governments get involved in energy markets. Explicit and implicit energy subsidies to industry and households remain in place for a long time for political reasons. This will create a fiscal issue for public finances for some time. Politicians like the power and stay involved in energy policy and energy markets for a long time, well after any crisis. Let's reset things here. We are seeing the treasuries come back down here in the morning. Explicit and implicit subsidies for existing energy sources make penetration of new energy supplies difficult. A stasis of sorts sets in the new energy sector. New innovation and investment is limited and dependent on politics. Well, isn't that the way that it goes in every industry? There are policy operations to meet immediate crisis needs, e.g. credit support to utilities, direct subsidies to poorest households, incentives to non-exporting consumption industry to restrict energy uses. But when politicians step into the heart of pricing and supply, watch out. You got a lot of info from my treasury view. Thank you very much. I need to make another one. I've still kind of been working on it. Didn't really do anything for it this past weekend because I was working on the desk. Oh my gosh, let me show you this. I didn't get it. Here, give me it. Let me. Anyways, the last video that I got to make on treasuries, or at least that I have planned, is going to go a little bit more into how the supply and demand of the treasury market works, which is a complicated subject. What the objective here is, I get the impression from some of you that you're still confused on, like, okay, when X thing happens, is that a buy or a sell for treasuries, right? So working on that. But I didn't do much of it this weekend. I was working on my desk. I got this desk. I went and bought like this huge piece, and they said it was cherry. And we were going to refinish it, which is kind of a complicated thing because they kind of cut it skiwampus. I don't know if we want to adjust that or not. I'm kind of thinking now that I do. But I don't know. This piece of wood is like, they said it was cherry. I don't know. I don't think that's cherry. I would expect cherry to be a little bit more, I don't know, like reddish. This is like a very, very deep brown color. So it's a nice piece of wood. Whatever it is, it's a nice piece of wood. How close can I get before it doesn't? It's a nice piece of wood, but I don't know what kind of wood it is. It might be walnut. I don't know. It's kind of interesting. So that's what we did this weekend. Yeah, we'll definitely add more about treasuries. I mean, a lot of the videos we want to make in the future are going to be more about the current treasury market. Although, I don't know. We have a lot of choices. Thing is that this last treasury video is like, I think like, well, we'll get into spreads in that video too, I think. But like that was the last big one that I had planned. So I'm not sure where we want to go with our content after that. This last video that we put out is doing really well. Like when I made it, I thought, oh man, like it should be doing, it seems like it's just kind of tracking in line with most of my videos. And I really thought that it would be like well above all of them. But over the weekend, oh yeah, look at that. So here's like my usual trend is kind of in the gray. I don't know if you can see the gray, but like it's typical in that period, 3 days after it, to be at around 230 views, and we're already at 328. I know that a few hundred views like that doesn't seem like a lot, but that means that that's a video on track to be like 10,000 view video, right? So this one about order flow for stocks doing very, very, very well. I don't like the volatility in the markets. I'm a calm trader and I like slow motions. Well, yeah, I feel yeah. I one of the really big advantages of the treasuries is that it does give you time to think. Yeah. Well, there's pluses and minuses to that, right? And my thing is like, I want, if something's going to move, I want there to be volume behind it. I hate it when it moves on no volume, because that's moving on no volume. That's harder to predict, you know, that's less certain what's going on, right? If I see real volume come into a market, then I know that they're buying this market specifically, and I can come up with all these reasons about why they might be buying or selling it. But when it just kind of moves on its own, you kind of have to be like, okay, is there a correlation going on? What's the, what's happening? You have to sort it out. It's kind of annoying. So, but the treasury market, part of what makes the treasury market hard is that there's just a lot to know about fixed income, right? So we want to help there in any way that we can, especially since a lot of the content that you find out there on YouTube about interest rates and the Federal Reserve is not there to help you learn how to trade, but out there to convince you that the Federal Reserve is evil. So we want to fix that. I have to say, I keep coming back to this guy, but man, Joseph Wang, Fed Guy 12, he is a guy to follow on Twitter, man. He really understands this stuff, and he is always pointing out really good pieces of information on Twitter about this stuff. Don't mind waiting hours for volume. Yeah, but it needs to be like, I don't like, see, like right there at 31 half, down ticks on only 200 contracts. Okay. Not seeing like big volume on the other legs either. Not really seeing anything moving in the 6J per se super strong. I am seeing oil making a move on the upside. So it's a little unclear to me why it's moving. And this is kind of feeling to me like one of those moves where um, I'm not necessarily predicting anything. And so I just sit and watch it, and it ends up being a huge trend. And then I regret not jumping on, right? That's how that one usually rolls out. Twitter says Elon Musk's latest move to cancel his deal to buy the social network is invalid after he said the company's treatment of a whistleblower gave him another reason to walk away. Oh, that's Twitter says that. Hmm. Anyways, back to Twitter here. Let's go down and see what we've got. Oh yeah, but we got to talk about other videos here. So let me get all the way through Twitter here, and then Brannigan says it's an important week in the gold spot market. 1700 has provided resistance. However, 2-year yields are now pushing 3.55. Fundamentally, this week is massive for gold. A miss on CPI and inflation for the U.S. will create a narrative of slowing faster than expected. That is the case, it's likely gold trades back towards 1800. However, a number in line or higher will set the stage for front end yields to move higher as markets price in additional hikes into 2023. Either way, it's a make or break for gold this week. Maybe. I think he's trying to look. I think one of the things that these guys do is they say, oh, well, I'll look at a chart and then, okay, it looks like it's at key levels and we have some catalysts for those key levels to break. And then that's when I would want to be doing stuff. So, yeah, well, we'll see. MicroStrategy files for stock offering of up to 500 million to buy more Bitcoin. You've got to be kidding me. Yeah. Dear Michael Saylor, the first law of holes is if you find yourself in a hole, stop digging. Yep. Applies to liquidity holes over here too, by the way. You find yourself in a hole, stop digging. Unless you really have a lot of contracts to buy and you want to keep buying them or whatever, right? Then a hole is great. But if you're really mining for a lot, then you could keep digging a deep hole, right? You're a big boy. They have all sorts of great equipment to pull you out. But if you're a retail trader, might want to just stop digging and get out of the hole. Wait for the hole to fill back in, right? Oh, that's sad. After 20 years after the first human genome was sequenced, there's relatively little to show for it in clinical practice. Well, that's because one, just because you have the genome and or you can produce a protein doesn't necessarily mean that you understand the process and why it causes that. Number two, there's not necessarily anything that you can do about it. Number three, it's still incredibly expensive to, man, how am I able to list off 3 things about this that quickly? This isn't something that I know that much about. But number three, it's expensive for somebody to map their own genome to see what's going on and make any conclusions about it. But someday I think that it will be significant. FRBNY economists have moved on from forecasting inflation and are now forecasting climate change and carbon levels. Too long, didn't read. Even net zero by 2050 is not enough. I guess now we definitely need to green the financial system ASAP. Okay. You need gold signals? No. Ang call. Don't look for signals. Signals are a ruse. Here's the deal. I'm gonna lay the whole secret out for you guys. We're always here. I assume that you guys kind of know this, but the reality is there's new people coming in all the time, and I don't necessarily do a good job of teaching this, but we know something here on this channel that other channels don't. And when I say it, it's going to seem like a really silly, trivial thing, but the deeper that you get into it, the more that things become clear and you realize that this is everything that everyone else is missing. Orders move markets, okay? Orders move markets. It's not the fundamentals. It's not the technicals. It's not any of this other. It's the actual orders that move the markets. Now, of course, the question would be, what moves the orders? Well, there's lots of different things that move the orders. And what we want to do is we want to do an empirical study to see, does X thing create orders? Does X thing, prompt orders to come into the market, right? Well, one of the big things that they've done when they've done this kind of study is they say, okay, so what about technicals? Okay, like if we have a double bottom or we're coming to a Fibonacci level or any of this sort of thing, does significant things happen? And what they find is that when you approach the market from that perspective, it is incredibly efficient. The market is very statistically efficient. And that is because when you trade something, it makes the markets move, right? You trade something that's orders move markets. So you move the markets by even your one little lot has a small but measurable effect on the market. And when you're all trading it together, kind of makes the markets into this big mess of noise. So the whole idea that you could find some sort of technical setup that will then give you a quote unquote signal in gold is nonsense, essentially. Now, there are statistical properties of markets that are different from a random walk, and we talk about that on this channel, and in particular, you want to watch the video about the stylized behavior of markets. But that means that you don't really want to look for quote unquote signals. What you want to do is you want to do an analysis based on the orders and come in and say, okay, what are the things that could create orders today in the instrument that I'm trading, right? So Angkor, you want to trade gold. What affects gold? Well, from what I've seen, the biggest influence on gold at the moment, by the way, S&P 500 spiking up. The biggest influence on gold is what the interest rates are doing. It tends to follow a positive correlation with treasury prices. So if treasury prices are declining, then gold tends to decline as well, right? We also have to think there are some orders that come into the market selling from gold suppliers. There's always new gold coming on into the market. And who buys gold? Well, some people buy gold as a sort of speculative hedge when they think that like the world is going to go to crap. So right now, the S&P 500 is handling things pretty well, and we're actually getting a little bit of a buy here. And the retail traders are very confused by this. And I don't necessarily know what's causing the ES to move up. That's a really complicated analysis. But so are we going to see a whole lot of those? No. Another thing is that there's a lot of demand for gold in Asia, China, and India. They love to make things out of gold, and so that creates some of the demand. But China is not doing so well. India, well, I don't think that India's economy is a disaster or anything like that, but their political situation is a little weird. Anyways, these things have kind of all been turning into, when you scheme it all out, kind of been a net sell for gold. But we are seeing somewhat of a change in the treasuries. If we come back over here to the chart, now I'm not going to use the chart for a signal, and I'm not going to come in and say that the current action is predictive of the future, but we should just note that the treasury markets are starting to have stronger pushes up when they push up, and they're having a hard time getting back down to these lows. And there does appear to be some people making the speculative bet that we've already reached a low in rates. And that has been, or at least at the moment, is appearing to be a strong driver for the for gold. For gold, and then silver in particular. Look at silver, man. Silver is like, woo. I mean, the silver sold a little bit too hard too, but man. Okay. So that's where we're at in gold. So what I do is I come in and I say, okay, do all of that analysis. Which way do I want to go? Well, it looks like here in gold that probably you want to go long. Now, the next thing that I want to look at is there is some technicals that we can do, right? So one thing that I can do, if I make this gold chart a little bit bigger, okay, is I can look at what kind of the volatility in the instrument is at the time, right? So there's going to be a certain amount of noise. So if I did want to buy it, there is a possibility that I could get, let's say 1739 in gold, right? Of course, there's this last pivot is another spot that you could look at. And one thing that I want to look for is liquidity holes. So what will happen is if somebody buys something, a big block buy of some sort, right? They're going to move price a certain amount, and then it's going to kind of come back and get stuck in this rut, right? So if it gets stuck in that rut and I can catch, the far side of it, great. Not sure if I've seen that right now. We might be seeing that right now in the treasuries, or sorry, in golds. It's kind of hard to say without having the dumb up, right? But then I can kind of pick what would be an optimal spot to get in, and then my larger. So that's kind of using the technicals to refine your entry. But ultimately, we're not using a signal, right? We're doing an analysis of the order flow and determining which direction that instrument is likely to go that day based on the known flows. Yeah. And that's how I would approach trading. Don't look for signals. Okay. Signals are the market is very statistically efficient. Today's session is rollover for the equity products. Yes. Well, it was before, but now it's really like everybody should be switched over. People talking about football already? By the way, did you guys watch Formula One this weekend? Oh my gosh. You don't watch Formula One. First of all, I would encourage you to watch Formula One. It's the hot thing. Just to, be ahead of the trend, if anything, because, people will be talking about it and you'll know about it and it'll be fun. And it is fun. But the race last weekend at Monza was crazy. That was so much stuff happened at Monza. And like the two leading championship contenders took each other out of the race. And I'm a McLaren fan, and McLaren won, went 1-2 after doing very poorly all season. Well, not poorly, but they've been back there. It was the whole race was just dramatic. You know what? F1 is a fun sport. You're watching something. The difficulty that I have here with futures trading and streaming futures trading is that it's kind of difficult to set up. There's a story that you're going to be watching for like 20 minutes, right? Because what often happens is we'll come in and then nothing happens, right? That kind of sucks. But Formula One, man, all sorts of crazy stuff happens in a Formula One race, and you can build a narrative out of that for sure. And it is fun to watch. I guess for me, I should probably put a little bit more effort into summarizing what happened in the markets, right? There's another uptick in the treasuries. So I haven't seen anything in the treasury that screams liquidity hole to me. We do have a lot of volume that's traded at 0.5 though. It still looks like a very illiquid market to me. I mean, we're way better than we have been, right? 1300s, 1600s. So liquidity actually looks pretty good, relatively speaking. Oh, okay. So there's some trading there at 0.3, 1800 at 0.3. But a lot of these ticks have just only been on a few hundred contracts. So Treasury's not really giving us much clues about what's to happen today. We're getting to the top of the hour. It does seem to me that markets are kind of sit here and see what the equities decide to do. But given that we have CPI tomorrow, so here's the interesting thing about CPI is that everybody seems to be saying like, oh yeah, CPI doesn't matter anymore. The Federal Reserve and the ECB both seem to be okay with 75 basis point increase, regardless of what that CPI is. And so I'm starting to see a lot of people saying that the CPI is overhyped and that nothing big is significant is going to happen from it. Actually, let's come over and do a little research here on the CPI, because we should have the median estimates now. Bloomberg should have the estimates, right? I wonder if I go to Bloomberg if they show me more of that. Okay, so tomorrow, the core CPI estimate is spot 3 in line with the previous month's core CPI of spot 3. Okay, so spot 3 is actually about where you want inflation to be at, right? There's kind of always been this, like, you want a symmetrical inflation target. So if inflation went too high, then you kind of want to have a little bit of deflation for a little bit. But I don't know, if we came back and we were spot 3 every month, that wouldn't necessarily be terrible. Spot 3. So if I go to, can I? Because I do have a Bloomberg digital subscription. I'm wondering if let's see here. Bloomberg. Well, politics, industries. I mean, I know they have a calendar somewhere at least. No, but no, I don't see anything on there. What's their most read this morning? Russian defenses crumble as Ukraine retakes key territory. U.S. inflation will guide Fed readying next hike. Eco next week ahead. Economics next week ahead. Markets, economics. Economics, the U.S. economy is a safer bet than the dire Europe's Goldman strategist. I agree. If there's anything in the market right now, I say, yep, I want my money to be in the U.S. compared to Europe for sure. I guess you could say, even though I don't have an active trade on, I am long-term bearish the euro, right? Which, by the way, where they are just they're a cent above par in the euro today, after having spent a lot of time trading back and forth around there last week. Okay, well, not too much on there. I'm told that the range of estimates is pretty wide, and I'm kind of interested to see what are the higher end estimates for the high end inflation. Because if they came out and like inflation was spot 5, or heaven forbid spot 6, spot 7, I think that the markets would react to it very strongly. I don't know if a spot 4 would be a big deal, but you know, you get into above that, the markets could react quite adversely. So everybody kind of seems to think that it's a nothing burger. It's a very interesting to me. But I mean, so let me come back here. If we come to this week, okay. So we got CPI and PPI, and then we got some manufacturing indexes on Thursday and consumer sentiment on Friday. Okay, so we got all sorts of important stuff here. And then we are, if I recall correctly, we are within the what do we call it? The blackout period for Federal Reserve speakers. So we shouldn't be seeing any Federal Reserve, because it's the Saturday before. So Federal Reserve meeting happens on the 21st. So the blackout period starts on the 10th. Okay. So, and then we do have some things before the Fed meeting next week, right? Oh, no, a whole lot. Just building permits. So we do got some important economic data coming out, but I don't know. The market may be kind of like just continue on the mode that it is until after the Federal Reserve. You think? That's kind of what it looks like to me. So far in the treasuries, I think I'm happy with having not been involved in it. The S&P 500, on the other hand, kind of looks like it might want to do something. There's definitely going to be activity when they get started, right? So we can keep an eye on that. Oh yes. Okay, so I'm just going through what are some other things that we want to check up on. Oh. Read that later. Oh, here we go. Look at this. So here is open image in new tab. Oh, Jean-Philippe, I love you. So here are the economic forecasts from central banks. And notice how every single one of them ends up being wrong. Like nobody said that inflation was going to go higher than it did. They all ended up being lower, but they all end up going towards 2% too. Every month since the start of the current inflation rally, central banks and workhorse models did stubbornly predict that inflation would rapidly go down, only to be proven wrong the next month. As recently reported in the Financial Times, it was more or less impossible in our models to produce any inflation that would not be temporary, Belgium Central Bank Governor Pierre Wunsch, an ECB council member, said last week, adding that they always showed price rises falling to the 2% target regardless of the assumptions. We have come to the conclusion that we know much less about inflation drivers than we thought. Well, indeed, there are unfortunately many inflation channels that cannot be captured by standard general equilibrium models. In equilibrium, supply equals demand in both good markets and in the labor market. So the obvious channel by which prices, wages, increase because demand exceeds supply is just absent. In standard dynamic stochastic general equilibrium models, inflation is driven by a positive output gap, overheating of the economy itself is only possible when prices cannot adapt immediately. Inflation expectations are assumed to be rational and hence only affected by true economic shocks and by the anticipated policy of central banks. There is no room for animal spirits overreactions or feedback loops from past realized inflation into future inflation expectations. Models, based on the rather silly assumption of equilibrium, failed in and after 2008 when J.C. Trichet declared macro models failed to predict the crisis and seemed incapable of explaining what was happening to the economy in a convincing manner. As a policymaker during the crisis, I found the available models of limited help. In fact, I would go further in the face of the crisis. We felt abandoned by conventional tools, says J.C. Trichet. They failed again in 2021 and led central bankers to declare that inflation was transitory because the real mechanisms behind the current bout of inflation were not properly identified and absent from, quote, cutting-edge macroeconomic models. Time to pay attention to Pierre Wunsch's remarks and introduce genuine non-equilibrium effects of various kinds and behavioral/cognitive biases into macroeconomic agent-based models. Bravo, sir. What a post. What a post. Man, the people that respond on some of these posts too are like amazeballs. Some of these guys. Serious people in the industry talking about this stuff. The problem comes from an over reliance on models while dismissing deep human knowledge expressed in the books and theses on social phenomenon and historical developments. I am also inclined to think that the generations of economists trained after the shift to rational expectations and the related popularity of DSGE models considerably lost any sense of deep economic humanities/cultures. It's time to go back to the seminal works of Fisher, von Mises, Walras, Friedman, Keynes, and so on to actually read them, not bring them just as a footnote in an article about a fancy new augmented model or other model or any other model for that sake. The illusion of control and knowledge now prevails in an intellectual discipline or intellectual focus that remains above all a social science. The quantitative tools were supposed to help formalize the deep intuitions and thinking, but with time passing by, these tools and models acquired a legitimacy and truth of their own detached from the original intuitions and thinking processes. Ah. So the big takeaway from this is don't trust the models, right? At least not the ones on inflation. It's a model on inflation. Just ignore it. Just ignore it. Mhm. I think I'm gonna go back later, find every post on that thread, look at who it is. All sorts of smart Europeans that I wouldn't otherwise know about. All right, so I think that's good for there. Just always want to check everywhere, especially on a Monday, make sure there's nothing like really cool they were missing. But I think it's time to open up Evernote here. I'll open it up off screen. Man, the treasuries are really slow at the moment. So sometimes you'll see a move start to develop around this time, but it is unusually quiet today. Man, Evernote, you update your application way too often. Like, way too often. Plan videos. How Gamma broke markets. Yeah, we did that one on markets basics. Oh, and getting started V2. We did that one too. Well, ooh, maybe we should make that video. So some of the videos that I have at the top of my list are how live stream traders fool you. What do you think about that one? I mean, we've harped on that subject many different times in videos, but maybe if I presented it that way, it would be better video. Would do better. I don't know. What do you guys think about that one? What else do we got? How much do you need to trade? I do think we should probably make that one. Maybe we should make a video why the projections are wrong. I'd love to make a video. Wonder if you have maybe if John Philippe has some ideas for us on that. Maybe we should look more at what the model that the Federal Reserve is using. Doesn't sound to me though when he's talking about that Jean Philippe is like, oh, like we have a model that totally works. It might be more interesting to try and make a model that's like, how will the markets react when they're wrong? Right? over and over and over again. Dealing with tilt, I think that's another one that might be really good. Should we put that into our planned videos? I think so. I was going to make a video about how Bitcoin sucks. That would be fun too. But I do think that we want to make more current event kind of videos. I don't want videos that are like only relevant for that week kind of stories, but kind of more like macroeconomic videos that will be relevant for like the next few months, you know? It's kind of interesting. The further along I get at this and the better I've been getting at the trading, the less I feel like I have to say. Hmm. So interesting. Well, it's not that I don't have much to say, it's just that we've made so many videos. The biggest lie in day trading. That's another one that I do kind of still want to do. It doesn't feel like as relevant as it did 2 years ago, but right, because the biggest lie in day trading is that you should follow other people, right? Learn from other people, but follow the orders, predict the orders. So most of these people, they don't understand that stuff. And you're not going to make money from an analysis that somebody else is sharing that everybody has. Unless it's me and there's only like 12 people in the channel, right? But there have been times even when we get too popular and it's been, it's been detrimental to our trading. It does happen. Oh, by the way, Steven, was that Steven that messaged me? Oh no, it was somebody else. Never mind, it was somebody else. Oh no, wait, it was Steven. Yeah. I'll take care of your indicators trial after stream. Do we do a poll tomorrow? Sure. Although this one will be kind of weird. Okay, CPI above, in line, below, and I'll add an option, doesn't matter. I'm just kind of curious. I do feel like that the CPI doesn't matter is a market sentiment thing. So we'll see how many of you guys go for that. Okay, so we're about 15 minutes before the start of the hour. I want to go back through all of our stuff here. Well, so first of all, I want to take a quick peek at Reddit and see if we got anything interesting where we might want to focus on an individual stock that's getting really exciting. No, Not seeing much on there. I go into their daily discussion posts. Interesting. It does seem like a quiet day today. We could come through and look at, well, yeah, so one thing that we will do is go to finance. Most active stocks. Looks like AMD up at the top again, followed by Apple. I'm surprised that NIO still trades a lot. Carnival, huh? None of these look like unique video, unique gainers though. So let's come back. First, I want to remind anybody you're new, make sure you subscribe, hit the bell icon. That makes it much easier to find the stream in the morning and to make sure that you don't miss the new videos, because I have a lot of really informational videos. And always the thing that you can do to help this channel the most is, of course, like the live stream here. Hit that like button. That really helps. But the thing that helps the most is you go and you watch the videos and comment on the videos and ask questions, and I'll answer those questions. We're getting to a point, like I said, where a lot of the really big informational videos that I wanted to make, we've made. So we're at a point where if you ask the right question, and that could be a whole video, we might make that video right away. So, make sure to ask those questions in the videos. Also, I want to make sure that you are aware of all of the links that we have in the video description. I don't put that stuff in there unless I believe that it's something that will help you. So we do have as $100 off of Jigsaw. That's the software that I use. We have the affiliate link for Financial Juice, which I really would not recommend day trading without a new squawk, especially in the futures. So there's these mugs because you're here every day. You might as well have something, right? Traders gonna trade. So check those out. Let's come back and look at the markets and where we're at here in the morning, just before the equities open. Well, the S&P 500 did have a bit of a sell when we first came in here that has since recovered, and we can see the treasuries kind of moderating their upside, but so far it does still appear to be to the upside. We're also getting a little bit of a run in oil here this morning. Most of the other instruments, nothing too big. There's a little bit of a move in the dollar here. Let's just come back to the volume profile. Treasury's quite bullish today. Let's say mildly bullish. S&P 500 doing okay. Oil now looks much more positive. Although I think oil needs to get back above 90 before anybody gets too excited about that one, right? Gold and silver look good. And Kappa looks okay. And when I come over here to my watch list, silver is the biggest winner today, followed by oil, with natural gas being the biggest loser, and corn. But natural gas, corn, and the 6J are the only ones really down this morning. So that's where we're at. And what are you guys saying for our poll so far? Looks like a couple of you think that it will be below and in line, or that it doesn't matter. Nobody so far thinks that the CPI numbers will come in above expectation, which is very curious. Very curious. So the core CPI is expected to be spot 3. None of you expect that it will be above spot 3A. Well, based on my read of the economy and looking at prices and stuff, it does seem like that prices have kind of eased off, doesn't it? Though some of those goods that are on the CPI are things that I'm not directly looking at all the time, right? Like there could have been a surge in new car buying, for instance, and that would affect things. Well, so we're about 10 minutes until the S&P 500 opens. I will keep Apple up here on the left side. If there is a stock that you're interested in trading today, you want us to look at, let me know, and we'll pull that up. The thing I find really odd about this market is that everybody seems to think they know what CPI is going to be. Everybody does. Is there any? I should have added another option to the poll that was like, I don't know. I don't know. Because it seems like everybody knows how the CPI is going to play out, and that everybody expects that it's going to be in line. So if everybody thinks that they know how it's going to play out, then why are they all kind of quiet here this morning waiting for the CPI? Well, I guess, it's a big event, and so you don't want to take a trade before that. I suppose that's a reasonable explanation, but Caleb Phillips says no clue here. I gotcha. It's hard to be humble, right? It's hard to be humble. I feel like that everybody's so certain they know what it's going to be that it's going to surprise people. That always seems to be the way that things play out. Is markets are just very, very good at surprising us. I don't know, man. It's the same thing with like Federal Reserve policy. It's like, okay, this is like the most complicated thing in the world. We don't completely understand inflation. Central bankers have a very hard time doing this. Okay. We have these people that literally they dedicate their whole lives to central banking, and yet everybody in the public thinks that they're stupid in doing it wrong, or maybe evil in doing it wrong. One of those two. Everybody has an opinion. Everybody has an opinion on central bank policy, don't they? I mean, I have an opinion on central bank policy, but part of my opinion is that it's almost like doesn't matter what they do. There's going to end up being bad parts to it. So you lose either way, right? Oh, you know what? We never turned the music on. Let's turn the music on. I don't know why I keep forgetting to do that. It's Monday. Muddy says America is doomed. We're all doomed. I don't know, man. That's just... There's a lot of reasons to be concerned about the economy right now, aren't there? And in particular, in Europe, I'm really concerned about what I'm seeing in Europe. I have not seen a single person that knows what they're doing. Here, let's start the music. Never seen a single person that understands these markets come in and be like, oh, what the Eurozone is doing right now in regards to energy policy is, it's a really smart way to deal with this issue. Pretty much every one of them are saying this is terrible. Like this is going to be really destructive to the markets, and I can't believe that you guys are doing this, right? And yet everything just kind of continues on like it's hunky-dory. Isn't this kind of the problem? That's one of the big problems I think we have these days with policy, right? There are very negative effects for sure from some of these things, but if you don't feel them right away, and then they have all sorts of reasons to explain away why it wasn't that thing, right? That's always the case in economics. TLA Trader, I just saw your new video with the new data feed shares. It sounds exciting. Do you have a link to the data feed? So I don't know what you mean by a link to the data feed, but in the video description, there was links and a coupon code to sign up for it and get 30% off your first month or whatever the deal is. But if the question is, do I have the data? Yes, I do have the data. And the Jigsaw Dom that you see in the upper left-hand corner of the screen is Apple. That is Apple stock. So I went and I picked the biggest one. We have the biggest one up. Well, Madi, they're one and the same, right? He's saying I'm not talking about markets. I'm talking about a country and liberals ruining the country. You cannot separate the markets and the politics, especially not in our day and age. The government just has such a strong foot in the market, right? I find it very distressing sometimes, to be honest with you. Like the big mistake that I always see people make is that they think, well, it seems like things aren't fair. Rich people make more money than me. Well, okay, life's not fair, and I don't think that you should necessarily be so concerned about the wealth disparities so much as it is, are you able to do the things that you want to do, right? Life's not so bad from that perspective. But let's just assume that you are concerned about that it's not fair. How do you fix it? How do you make it fair? And it seems like the solution that people always gravitate towards is, well, we'll give the government all of this power to redistribute the wealth to people. Okay, well, there's a problem with that solution, right? It makes the government bigger, right? And the bigger that the market gets, the easier it is for wealthy people to manipulate the government to their benefit. That's why there are rich people in communist countries. There is a protected class of wealthy people in communist countries that control the government to the detriment of everybody else. So it doesn't really fix the problem. It makes the problem worse. And I see this going on all the time, and it's just kind of like every step of the way, it seems like I see something that's like, well, that's not good. That's not good. You know something about markets, you can see that they're making poor choices. And is it to the point where you're kind of like, you can't stop the slide and things will come to a head? Well, I don't know about that, because here's the thing. Our bias, the way that our human brains work, is we're wired to be more concerned about the downsides of things. Because for your ancestors, if something bad happened, it meant you died. It meant you starved to death, right? There was something wrong with the politics, for instance. If your country didn't, your country's economy collapsed, often meant you starved, right? So the people that were most concerned about this sort of stuff tended to be the ones that survived. But that means that we have this tendency to always read into the bad, right? One of the best ways to make money, in my opinion, the easiest ways to make money, and I would say excess returns higher than that of the market, which is incredibly difficult to do. There's all sorts of other things in here that kind of make what I'm about to say impractical. But if you can come in when everybody's feeling negative and be optimistic, it generally tends to work out for you, right? It just, sometimes you might have to hold through it for a really long time. Right? I had this guy, do you remember there was a couple of weeks ago, these people were saying, oh, this market looks exactly like the markets after the Great Depression, or it was something like that. And they overlaid the two charts on top of each other. And I said, no, that doesn't work that way. That's not effective at predicting future action. And the chart did end up being wrong, because after that we had like a 2-3 week long rally that really screwed their chart up. Now you can kind of like come in and like rescale the chart and everything and make it match up again, and you say, okay, now it's going to work, because really what you're doing is you've got hindsight bias, right? But the past few days, it's been up again. I had somebody on TikTok, they're like, oh, do you feel dumb about this now? Because, the markets had been down. Then the next 2-3 days, market rallied. It's just like, that's all I'm doing. I'm not even saying I know which way it's going. I'm just saying you guys all seem to be really bearish and that your sentiment seems to be bad. And I don't know what it's going to do, but I'm going to bet that you're all wrong. tends to work. I would probably get a lot more stream viewers if I was always negative and always said, guys, government, it's all gonna fall apart. The Federal Reserve, guys, we need to get rid of if we don't get rid of the Federal Reserve, what is it called? Abolish. If we don't abolish the Federal Reserve immediately, then it's just, this country is doomed. And a year from now, we will be in a civil war. And I bet you lots of people would love to watch that. Right? But I'm not interested in that. I'm interested in helping you guys get better at trading. And I'm interested in making money. And if there's anything that I've learned in life, it's that you make more money if you're optimistic. Optimism, that's edge. That's edge right there. Mighty, these kids are anti-work, lol. Is the market taking that into consideration? Okay, so this is an interesting subject, Mari. I actually think I have some insight to share on this that people don't typically consider, okay? So first of all, there's definitely a cultural thing to it, okay? This is like, there's the anti-work movement, and then there's the quiet quitting movement. The quiet quitting one was really weird because the first videos that I saw about it were basically like how to slack off at your job, right? It was like how to put in as little work as possible without actually getting fired, right? And people turned it into somehow all of these influencers that are like, you know, working influencers, like career influencer types, came in and were like, no, this is just about work-life balance. And yeah, it's not quiet quitting. You're just having work-life balance. No, that's not what the original people were doing. The original people were doing, here are the tactics that you can use to put in as little work as possible and kind of prevent them from noticing. That's what that was all about. Okay, so yeah, there seems to be this social dynamic going on right now where there's a lot of people are kind of tired of working. Okay, I actually believe there is some evidence to suggest that this sort of thing is a function of an inflationary environment. Okay, so when you have an inflationary environment, the problem that you're going to see, especially a stagflationary environment, is you're going to see demand continue to be high and supply continue to be low. Because if this market dynamics were really functioning the way that they should, that supply should come right back up really quickly. But there are a lot of things actually suppressing the supply. So like, for instance, we have a very, very tight labor market, right? So if you want to grow supply, who's going to grow their avocado toast? But no. If you want to create more supply in the United States, let's just limit it to the United States, okay? We need to really grow the economy, and to do that, we need more supply, okay? So that we don't go into stagflation. Where are you going to get it from? Everybody's already working, supposedly. Now, some of these numbers, you know, they're saying that like people are picking up second part-time jobs and things like that. Like, in other words, there's like this big demand in the labor market, so much so that people are picking up multiple jobs, essentially. Although maybe the unemployment rate is higher because people would rather have full-time jobs and they're getting like multiple part-time jobs. That could be going on. But generally, there's not a lot of people, and if we really needed to grow the economy and we needed more workers, we would have to import them at that point, right? In other words, if you don't import workers, then it's inflationary, right? Because you don't build enough supply, right? And these dynamics all kind of like reinforce things, right? If the labor market is tight, it kind of leads the labor market to continue being tight because everybody knows what's going on, and all of the companies kind of fight for it. And anybody that's growing, they really have to come in and fight for them. And that's why it's really hard to stop that dynamic without like totally crashing the economy, right? So if you can't increase or decrease, so there's how many people are actually working, but there's another component to that, and that is productivity, right? And so what you're going to tend to see, because people do have to have jobs, what you'll tend to see in an inflationary environment is instead workers become less productive. And that's what you're seeing. In other words, the inflationary environment is kind of leading to things that are causing workers to feel like being less productive. So one of the things that we need to do, if we're all on board on, you know, being team players here to help the economy, then one of the most important things that we can do right now when supply is constrained is to work as hard as we can and to be as productive as we can. And that's going to help alleviate some of those market pressures. And in fact, I would argue that now is like a really good time to work hard because all of these other people aren't working hard, right? So maybe there's an opportunity for you to get a leg up on them. Yeah. Seeing a higher crime rate and lazy people on EBT. Well, the treasuries do see a little bit of renewed downside pressure coming largely from the long end in the 30-year, and we are seeing a bit of a steepener today. Now, a steepener, you got to be careful about because, especially since overall for the day it's been to the upside. So this move down in ZV is kind of a pushback, and it's stronger because of the way that the spread is going. It may not be very indicative of what the future moves are going to be, but we haven't had the S&P 500 going for about 7 minutes now. The S&P 500 has turned down. Delta wise, a little unclear to me where we're going. Oh, you know what? I don't think I have my my little chart over here. I'll turn that on. Okay, so it does look like the cumulative delta so far is kind of evened out. So we just kind of sit here, monitor things, and see where that turns. And what about Apple? I have the chart up for Apple. And again, it's there, even though Apple is on the up move, the cumulative delta that I see continues to be net sell. Curious. How do they help the economy? Well, because so if workers are more productive, that means more supply, right? That means that prices will moderate. The reason why I was saying it's more complicated than that is because it's not just the United States, right? Like the United States is not necessarily the supply bottleneck, right? Right now, the big issue that I see in our economy is that Americans are not building much of anything at all. This is a big problem because the big deflationary force out there in the market right now is deglobalization, which means that more of these manufacturing and products need to come back to the United States in the long run. And the high dollar is preventing that from happening, essentially, right? That's going to be a problem. But that's okay. We got a lot of young men. The thing that that I have a hard time relating to with people, because to me, you know, I went through school. I was always into computers. Every lunch I would go and I would get on the computer and browse the internet. I thought it was the coolest thing ever. And we would talk about computers, and my friends, we would talk about computers. So then I get out of school, I immediately go into computer science. I get it, you know, I determine which industries would be best to work in, got into finance, and then kind of, you know, learned so much about finance that when I left the bank, I wanted to continue doing it, and eventually that led to us having this stream, right? And so I was led through that kind of, I don't know, corporate gateway, I guess you could say, and things went pretty smoothly for me. But the thing that I have a hard time relating to is realizing that for most young men, that's not what happens at all. Most young men that go through school don't do honors courses and aren't interested in computers, and they get out of high school and they don't have any clue what they want to do, right? And I could come in and I could tell them, well, you know what? If you can do computer science, engineering, lawyering, doctoring, you know, those big or finance, right? You get into those, then you can make more money, right? So you should just pick from one of those. But I know that not everybody's going to be on that. And then where do they go? Well, for most men, you'd go and you'd work in manufacturing, or you'd work at the steel mill. That's what it used to be. You'd work at the steel mill, you'd work at the car plant, right? We don't have those anymore. What do these guys do? Right? Well, hopefully we bring some more manufacturing back for those guys, right? And they get better at it, and yeah. So I saw this thing the other day where they were saying that, you know, one of the worst things about the pandemic and the move more towards working from home, this is all very, very, very bad for young men, because young men, especially kids just coming out of high school, them going to work and participating in the work culture. I look back at that for me. Colleen Barrett Phillips, oil rigs, railway, and trekking. Oh man, did you know that there's like the railway workers are like gonna strike soon? There's stuff going on there with that, and it might be one of those stories that like all of a sudden jumps and catches the market. So that might be something worth investigating. Anyways, so I come in and I look at my kids and I'm like, okay, what are the values that I really need to instill in my kids? I feel like that my older kids, that it's already a little bit too late to really make it like a core part of their personality, but I can still help them to understand this stuff intellectually, right? And that's why I push integrity, excellence, and teamwork. These are the 3 values that will help you the most to be successful, okay? I guess to some extent they're corporate values, right? Because those are the values that you're going to see most from corporations pushing. But I had that, and I don't, you know, I think about that and I lean back onto those. Is it because those are really truly the most useful ways of doing things? Well, I believe that is true, but we must also accept the possibility that it's probably just that you're teaching that because that's what you were taught, right? Well, all of these young men, if they're work from home, they're not getting that, are they? They're not getting that, are they? Guys, there's a real problem when you spend all of your time at home. There really is. You need to have ties with your local community. We don't. It used to be that everybody in your local community, you'd see them at church, right? And there would be people at your church that lived close to you. Now we don't do that. Now we don't do that. 7 Bilgen, I don't have much time for futures anymore because of you. Well, that's okay, Bilgen. You know what? You do the schoolwork and you focus on that, and then if you have time afterwards, you know, you read books about the markets. Is what I would recommend to you, because nothing will help you get good at trading more than having capital to trade. And nothing will help you more in having capital to trade than doing well in school and going to university. People that have a college degree, lifetime earnings are significantly higher. So you're doing the right thing. Don't let it bother you. I know it's one of the things that I think I've had the hardest time dealing with. I think that I've started to come to terms with it. I don't think that my wife has yet. I need to work with her on this. I will try and teach her this. You know, every decision has its positives and minuses, and you really just have to look at your goals and decide what you're going to optimize and plan things out, right? So, you know, plan things, because you don't want to waste the time that you could have been studying, reading a book, watching TikTok instead, right? So instead, you want to sit down and say, okay, I'm going to watch TikTok for this amount of time, and I'm going to read this book for this amount of time, and I'm going to stay, you know, and time box it, right? and you have to accept that you're not going to be able to do everything. So we were saying this because yesterday she was like, felt like she did nothing. And I was like, well, but you cooked and you made these desserts and you watched TV series that you really wanted to watch, you'd been looking forward to. And, you know, you got all of those things done. And this other thing that you wanted to do, you can do that tomorrow because it wasn't the priority at the time. Well, now today, that's the priority. You got to plan it out, right? But you just kind of have to accept that you can't do everything. You only have so much energy. I was reading watching this thing where they were saying that procrastination is actually often your body, like your body does it to protect you. Like it's saying, well, you really shouldn't spend too much effort on this thing right now, because what if you have to run away for your life in an hour or whatever? Like it's saving the energy for that, right? That was a really interesting perspective on it. And the author of that didn't really have a very good answer for how you deal with it. But I think my answer is that if you have things planned out and you give yourself extra energy at the end, that you won't feel like that. Right? Planning. Oh, so my body is overprotective sometimes. Yeah. Right? Like think about it. Your body is designed to prevent yourself from getting starved, to prevent yourself from getting eaten from a tiger, right? And so your body is saying, if I spend all of my mental energy on studying the stock market or engineering or whatever the difficult subject that I'm looking at right now is, then I'm not going to have enough energy later on to do if an emergency happens. So it protects itself. And it's kind of self-reinforcing, right? Because you got to remember that all of these systems kind of have a self-reinforcing element to it, right? If you run, you will tend to be able to run further in the future, right? And if you don't run, then you won't have very much energy for running, right? So when you procrastinate and save that energy, really what it means is that you'll have less energy in the future. This is the same problem with the quiet quitting issue, right? Is you can't just turn it on and off, guys. You want to be trying to perform at a certain level. Now don't go like 110%. You know, say always give 110% or whatever the deal is. I don't like that kind of approach to it, just because 110% means that you will exhaust yourself, right? You really, and this is a hard thing because you really do have to know. You have to be performing at a high level and then kind of knowing what is like your limit, and always be giving yourself a little bit of extra rest, right? To feel comfortable. Giving 100% scalping the market will go into cause exhaustion. Yeah, I really, with the way that we trade, of course, I haven't been watching the order flow like a hawk because I did see pretty early on that the order flows were not conducive to a trade, So I've spent more time talking today. But watching the order flow, like really watching the order flow, can be exhausting. And especially when you're in a trade. These days where like the Federal Reserve days, where they do the press conference and all that, and I stream twice in a day, I find that exhausting. Can you imagine these people that stream for a living and they have to stream like 10 hours, 8 hours a day at least? There's people out there, they're literally streaming like 8 hours a day. Can you believe that? I only stream for 2 hours. Maybe I should be streaming for longer. Maybe the stream would do better if I had just quit everything and I just stream until the market closed. Kind of seems like that there was a period at least where the longer that you streamed, the more likely you were to be successful with it, right? I don't know, man. How do they do that? I can't do that. Talking for 4 hours in a day like this has me exhausted. Streamers, yeah, but they stream like games and talk a lot of nonsense in between for fun, so streaming is neutral, maybe? Depends on what's being discussed, yeah. Probably for less serious subjects. But also, if you're playing games, you don't necessarily have to be talking the whole time. Just the talking a lot can be an exhausting part. I need to bring my armrests down so that my shoulders can rest a bit. Because otherwise I'm gonna get myself all uptight. It was like right up here. Well, how are we doing on our poll? Well, it looks like most of you say in line, but above actually has come out above below, and a good percentage of you guys say doesn't matter too. After 11 votes, though, not a ton of votes. Natural gas taking off here. So now the biggest loser today is corn. Well, that's you know what? I haven't seen corn at the bottom of the list in a long time. But that is we had a very interesting macroeconomic dynamic going on this morning, don't we? By the way, I haven't had the Twitter open here, so did I miss anything? Uh-oh. The New York Times says Goldman Sachs prepares for layoffs as deal making slows. Do I have to log in with Google here? I'll log in with Google, that's fine. Continue without subscribing. The bank reported in July that its profit had fallen because of shakier economic conditions. Goldman Sachs is preparing for a round of layoffs that could come as soon as next week, according to two people familiar with the plans who spoke on condition of anonymity because they were not authorized to speak publicly. The job cuts will affect employees across the company, according to the people. Goldman typically revisits its headcount every year, letting go of the employees based on performance and to match the bank's needs. It had paused that program during the pandemic, which also coincided with a record period for deal-making when bankers complained of overwork. The program typically lays off 1 to 5% of workers. This round of layoffs is likely to be at the lower end of that range. A person familiar. Okay, so this is actually not a big deal. They're treating it like layoffs, and you'd be like, oh, this could be really bad for the economy. But really what they're saying is that Goldman is going to pick back up the usual culling. And in fact, they were saying that the round of layoffs is likely to be at the lower end of that range, which would be 1%. That's not very many people. Like when I did get laid off from them, and I think that it was more than that. Although I remember many times layoffs. I think that when I had worked there had been at least 5 rounds of layoffs. I think. Man, working there is tough. I understand why they do it that way, but I do kind of wonder if there's a better way. I think that their values, they're all very good, but they're also a little bit harsh sometimes, right? We can be more understanding. Not that I'm very good at being understanding. Not compared to my wife, for instance, not with my kids. So one of the problems I'm dealing with right now is that my Asher, the 2-year-old, it decides that he doesn't want to wear the diaper anymore. I mean, he should be getting potty. It's around the time where he could be getting potty trained, but he just doesn't even get that. Like, that's what we're trying to get him to do. Otherwise, I think he'd totally do it, right? So like, I have to like watch him like a hawk, and if he touches it, to like stop him. because he's like, okay, they're not looking, and then I'll take it off. That's probably too harsh, right, on my part. But like, what other choice do you have if you want him to keep the diaper on? I don't know. Hey, Tobias, programming question. Can I prevent my custom indicator from recalculating whenever I'm adding another indicator that... Oh, no, I don't think you can. So kind of depends on what you're doing, but if like, let's say that your indicator is really expensive, calculation wise, and so you don't want it to go and recalculate all of those values, right? What you can do is you can cache it. You can write out the values to a file of some sort, and then you can check to see if there's any data out there and pull the values from the disk rather than calculating them. And that's probably about the best that you can do with that, unfortunately. Because when you add another indicator, it reloads all Ninja scripts. And that allows you to do a bunch of other really funky stuff, because you can have your indicator come in at the beginning and say, okay, now look at what the other indicators that are on the chart are, and do stuff based on what other indicators are on the chart. That allows you to do some cool stuff. Not stuff that people typically do, but it is available. I admit that's one that typically drives me crazy too. By the way, remember On the Open kind of looked like we were having a period that was a little bearish, and since that time the S&P 500 has been nothing but up. Now it's kind of curious. Last week treasuries were pretty aggressive to the downside at points, and the S&P 500 not reacting to it. The treasuries and the equity indexes have really decoupled, haven't they? Let's see. So I got myself all distracted. Is there anything else in this that we want to see? I'm looking here to see where, because based on what they're saying, you would think that it would be more likely in the deals area for them to do more layoffs, right? Well, what about their consumer bank and all that stuff? That's what I'm interested in. I'm interested in my friends that are still there, and the jobs that will be here in Salt Lake, and the things that are likely to bring the bank profits in the future for the stock, right? Thanks for the answer, even though I was hoping it's possible somehow, right? You know what? I find this happens with Ninja Trader a lot, but like there's usually an answer, but it's usually not the answer that you were hoping for. You know? Like with the watermark, it's like, okay, so can you put a watermark on a chart? Well, turns out you can. It's kind of complicated. You have to make your own. And the ones that existed out there weren't very good. So I made my own. But you can do it. Right? There's answers like that all over the place. But you know what's the funny thing about it is that as often as I run into problems like that, almost every other platform is worse in that respect. Like Ninja Trader really is like the most flexible in that respect. That's interesting. CoinDesk reports as the merge edges closer, the price of Ether slipped 0.9% over the past 24 hours to 1755. Bitcoin, by contrast, rose above 22K, the highest since mid-August. And that moved back up to highs in natural gas. Looks good. By the way, did I say hi to NASDAQ Killer already? How's it going? How are you doing today? Dude, you're doing fantastic. That's good. You know what's something that I need to work on is like when people ask me how I'm doing, and I'm like, well, you know, we're working hard, whatever. I don't actually say, hey, it was so great, it was so exciting. I'm doing good. Did I show you? Where did the piece of wood go? We're working on my table. It's supposed to be a piece of cherry. Listen, is anybody an expert in wood? That doesn't look like cherry to me. Is that cherry? Is that cherry? That looks a little too brownish to me. It's very rich in here. Let's make the screen big. Yeah, look at that. See all the little, can you see all the little straws? So I think that means it's an open pore wood. Isn't cherry closed pore wood? I don't think it's cherry. I don't know what it is. It's got a smell to it too. It just smells like really nice wood. Side. Wish I could show you the. It's just a little thin slice that we cut off of it. The other thing was that, well, so you can kind of see down here at the bottom because our saw wasn't deep enough to go all the way through it. So this was the saw, and then we had to cut this part off by hand. But it's very hard wood. And we thought with cherry that it would be dark up here and then lighter down here, something like that. No. Doesn't seem to be going on at all. So I don't think it's cherry, but I don't know what it is. Maybe walnut. I don't know. It's kind of the color of walnut. You did it well. So we didn't get very far on the desk, but we did square it off a little bit. Did kind of draw some things out. I still have some decisions to make. So one of the decisions is like the legs are going to be made out of pieces of steel that are like 2x4s. So if you make the 2x4s, which way do you do it? Like hold on a second. How do I? So like if you got the pieces of wood like this, right? And then here's the other piece of wood that's for the leg, right? You do it like that. Or do you do it like this, where the thin way is this way and this is the longer way? Right. You get what I mean? I think I'm going to do it this way, but I could do it. I could also do it like this. I could say it'd have this one being the thin way, right? And then it's connecting into a piece that's the opposite, like that. Maybe it should be like that. Then it'd be more like feet. So I still got to decide on that. But I was also thinking about all these fancy things like cutting out, because it's, you know, it's like 80 inches long. I was like, and it's 3 feet. So my current table is that, and this table is like this, right? So I thought, well, what if we cut a notch out of the middle? But I found that to cut a notch out, that the notch would actually look more like this. I was like, well, that's kind of pointless. Might as well just laugh at it like that. So we're just going to keep it 3 feet. We're just going to keep it 3 feet, and that'll give me more desk space. And hopefully that will allow me to like bring my, I have enough room in front of the keyboard and stuff to bring like my DJ accessories and stuff closer. So it should be interesting. So that's what we're working on this weekend. That's what I did. Well, oh, you don't even see the screen. Okay, let me draw it again. So like if you've got if you've got a piece of wood like this, right? And they match right. This is the edge right here, right? And then this is like the inside right here. I'm not drawing it very well. Basically, if you've got a 2x4, right? This is me. This is the observer. Okay. Is the leg going to be the thick side or the thin side? Right? There you go. That's the question. But I guess it doesn't really matter because it's all still, so it'll be like, it'll have very strong structural integrity either way, right? I think what we'll do is it'll be like, I'll do it this way, and then I'll do this other one this way, and then this will be connecting into just a thin plate. That I think should be good at preventing any kind of flex. You should use SketchUp for drawing furniture. There you go. Well, what I really should do, oops, not that. I should really be using this tool right here, right? I should be using this, and then I get nice straight lines. Yeah. Right. There you go. Versus doing it this way where they're a little bit thicker this way and a little bit thinner this way. Right. They didn't draw that one nearly as well. Anyways, I lost interest in it. That's what happened. Lost my focus. Man, Treasury's still sitting at 0.2, huh? You think that they'll get a move in the Treasury before we leave today? It is not looking very good. Uh-oh, let's see here. Disney debuts new Marvel and Star Wars movie plans at D23 Expo, coming at a time when activist investors consider spin-off of properties like ESPN. Oh, so what are the new Disney movies? They're going to make movies? Which ones are they going to be? Come back to news. Oh, it says that D23 won't announce new movies. What's this? The sale on the futures market is intended to ensure that part of the gas quantities produced in accordance with so-called level 3 are made available to the market on a price-secured basis. Expect this will foster liquidity at Trading Hub Europe trading point, particularly during the withdrawal phase. Even when I look at like Twitter, not a whole lot going on. The S&P 500, an awfully good move up though, right? Yeah, so now I'm thinking about the desk again. Now I'm interested in it again. So the issue was that I was trying to show you was, so the table is like this, or we'll just draw a big square like this, right? So it's 80 inches wide. That's my current table. This new table is thicker, right? So I thought, what if we take a notch out? That way I can still be close to the monitor screen, right? And I could have my stuff over here. But what I found was that the amount of space that I need here was a little too much. Like the notch would have to be like this. The notch would have to be like a square notch to come out in order for that to work. So like, yeah, that's probably not going to go. So I think that we're just going to keep it. We're just going to square it off, and it's going to be a 3-foot table. And that will give me some depth. That will give me some like room to have another tier of things and stuff like that. And we'll be able to like mount some things differently and stuff. So like I can, if I feel like that the monitor is a problem, like right now this monitor stand is a little bit in the way, I could add another tier of wood to it, right? And mount into that and then have my other things underneath of it. So I'm excited to finally have it, but it will probably mean that I'll want to get different monitor stands at some point, probably. That's a disadvantage of that, because otherwise the monitor will be further away from me and the camera will be a little bit further away. We'll deal with it. Maybe actually it will be a good thing, because then maybe we can use 50mm lens and the background will be a little more blurred. Which is funny because I have like the ticker, right? The ticker, but it's always blurry. It's intentional that way I did it that way, but maybe I should switch my things so that the little news thing going down at the bottom just shows the top stock trending stocks. Maybe. All right, well, I want to come to Zero Hedge and see what narratives they push in this morning. Kamala Harris proclaims border is secure when asked about 2 million illegals crossing. Okay. Key events this week: retail sales, PPI, and Philly Fed, but every eye will be on the CPI, yes. The mob overlooks that the elite have to raise rates to try and preserve even a part of the system that they have built for themselves. Yeah, it's probably not worth reading to you guys. This sounds a little too political. U.S. railroads enact contingency plans preparing for labor strike as union talks fail. Yes, I agree. That's one to watch. That's about all they got going on here this morning. I'll come over to CNBC. There's a little key push into 116 again. Google spins out secret high-speed telecom project. Goldman's Apple Card business has a surprising subprime problem. What? Well, I don't like that. Stocks making the biggest moves pre-market. Carvana, Bristol Myers, Squibb, and Alphatech. Shall we go? Hey, Gus, how have you been? I haven't seen you in a minute. I want to go. I'm gonna pull up Carvana here. So what's their ticker? CVNA. Okay. We'll add that. Give it a second here. Ooh, this is a little okay. By the way, I was having... That is slow. Okay, here we go. Look at Carvana, man. Look at how illiquid this thing is. Like, what the heck? That's crazy. Let me add more market depth levels, or at least as many as it'll let me. This is not very liquid. This is not very liquid. 4105. It's flashing some liquidity. Not very much. Is it? Oh, you sent me a message? Okay, cool. Oh. Ooh, you doing some... Are you making those charts in Python, Gus? It looks like Python to me. That's cool. So, like, do you have it making trades? Man, the treasuries are getting pummeled now. I didn't see any, like, driver for this to come down like this, though. Just been doing this last, like, let's say 20 minutes. Nothing really going on. Well, we did say it's a treasury auction today, right? So I don't know. I was kind of leaning to the downside because of the treasury action, but the way that the action was kind of ugh. And even the way that this move is, well, there is some volume behind this, so I'm not going to like poo-poo it or anything like that, but I don't think that there's any way that I could have justified a trade to catch this, right? The only question is now, do you try and take it here at 30? They are kind of coming into like a key area that I think people might want to fight in. And I really don't like doing that because there's a chance that they just get stuck up in here again, right? Man, this Carvana is super illiquid. You're still backtesting? Okay. I've been exporting all of my data, so it's unstructured data, into CSV files every day so that I can start parsing it with well, I don't think I'm going to use Python. I think that I'm going to have maybe do some map reduce or something like that to do some interim transfer steps. I have to say there is some volume behind this sell, right? I'm not sure if we're going to run into the limit of their execution here. So we're getting a little bit of a sign of it at 30. Also, S&P 500 not really reacting. So what do we got? Silver's still the biggest winner today, 5.3%. Man. Well, you know what? While I'm thinking about it, I'm going to come over here. I'm going to look at because I do own some silver. And I'm not sure how the instrument that I'm in is reacting to silver, if it's doing it positively enough or not. Wow, so Carvana is up more than 7%. After Piper Sandler upgraded Carvana to overweight from neutral, the firm said Carvana could double from current levels, noting the stock is too cheap to ignore. Okay. Equities quietly edge higher. And up at AAPL and CVNA. And the title here, also, it is the 12th. Spreads come in there a little bit in Carvana, but it's still very iffy. So like when you're just looking at the order flow, well, it's odd there's 1,013, but like you see how these guys just below rise, and that's a pretty solid block. It's a lot more solid of a block than like this stuff above them, at least. This looks like a market that, you know, market orders could really, really push it, right? Because 100 lots is about what they're putting out there. So, like, let's do that in cash terms, right? 4173 by, oh. It's 41,000. I need a piece of paper to be able to move the 0. No. If it's 4173, then you just move it twice. So it's 4,000. It's not. So 4,000 to make it tick up, right? It's not much. Look at that. 11-cent spread now. There are some people putting sell orders out, but then they get cleared. I don't know if that's what they could continue. Well, let's come back over here and duplicate a new tab. Carvana here. Well, that is, if we thought we were going to continue to see uptrend, this area is not too bad. Put that back up there. Yeah, that's a pretty wide spread. And like, here's the thing, you get rid of those like 33 orders in the middle. Yeah. It's messy. Treasuries are continuing to push down. There was a little bit of a pause at 30, like we suspected, but now the selling is continuing, and it really does look to me like there is a block sell behind it. So I'm gonna go out on a limb here and say that it might be worth going for a short, especially for like maybe like lows of the session. 18? Maybe not. 18 seems a little too far. 27.5. I don't know. This does look to me like a move that could continue, but I don't really have very good benchmarks below us. And the bigger issue is we got like 30 minutes here before we take before I quit for the day. So I don't think they would make sense for me to try and take a trade. So when is the auction? It's an 11 o'clock auction, right? Well, 11 my time. Yeah, it is. Okay, so it's 1 o'clock Eastern time is the 10-year note auction. I am a little concerned that I still seeing like the block order pushing, and I don't think that this wave is done yet. But what I've got to be concerned about is like when that wave completes, that price might float back up to 116 even. It's just, it continues to sell pretty good, right? How much in net delta is it? 77, and now we're at 69. So let's just call that 67 and say it's about 10,000 contracts. It's not that much, but the market seems to be very illiquid, right? What if we put this Carvana one DOM over front of the Apple one? So I don't know if you guys are watching Apple at the moment. gonna reset them there at the bottom. This song seems a little bit too unserious to me. It's not fitting with my vibe, you know? That's probably too peaceful, but whatever. I don't think I'm ready to try it out, the drum and bass. I like it. So the down ticks was 1,000 contracts, 1,000 contracts stack, and then the bid pulse. So we are continuing to get strong indications in the tape of trend. Oh, okay, so that's interesting. I'm just noticing on the spreads, it looks like things are flattening back out, but not on the 2 and 10. I got a baby. I like standing. Come on, stand up. Yeah. He looks a little concerned. Dad, why are you doing this? He can't see you. There you go. Yeah, move those legs. Let's see if I do it. You're looking at me. Hi. Yes, you can't help me to my smile. Yes. You're such a smiley baby. Yes, you are. That's a smiley baby. Maybe can I do it like this, maybe? There we go. Yeah. You paused the video, Marty. How dare you? Hey, there's D. How are you doing? By the way, I just should bring up again. You know, I have another video about the treasuries I want to make. And then we kind of are a little bit like, that was like the plan content where I was like, oh, I really need to make sure I get this and this and this. And now after that, I think, yeah, we can have little choices to make. So if there's videos that you'd like to see me make, now is the time to, I don't know, what would you say, start vouching for the sorts of things you want to see. But the thing that's going to be the most, that I'm respond to the most is comments on the videos. So if I see comments on the videos suggesting there's an area where more education is needed, then I'm much more likely to make videos on that. So go with the videos, leave comments. Leaving comments on the videos helps the channel out more than anything else. So I really appreciate when you guys, and if you're just like, here's an experience that I had, or here's a dumb question, even if it's like a question that you don't necessarily have, but you think that other people might have, the questions are really help the channel out. So, but right now it looks like we might make a video. I think something that's really popular is like, how much money do you need to day trade? And I think we might make a video about that. I also think we might make a video. I don't know. But you know, we've talked a lot about how like some streamers and stuff will kind of fool you. I don't know. My mind's not on that as much anymore, so I don't know if I really want to make that video, but maybe we should. I don't know. So you tell me. Yeah. Can you see yourself right there? You see yourself? Are you talking about the manufacturing jobs? Well, it does look like the treasuries might be getting sucked back up into 30, as I feared. Oh, William Shatner is tweeting this morning. Went through there too fast for me to be able to read it. Do a documentary video on the Wall Street bets. Well, we could make videos about stuff like, yeah, especially if it's something that's going on at that time. The thing was, I made a video about the GameStop thing, right? And I pointed out a number of things that the retail traders were getting wrong on GameStop. And I think that a lot of the information that came out since really validated what I was saying, but that video never really did very well. I think that there was too much competition for it. You know what I mean? So that means that if I make a video like that, it would really need to be early on a subject that, you know, hasn't picked up yet. Like, I could have made a video the first day on GameStop about what was going on, and that might have boosted the channel, right? Or would have gotten the boost instead of the stream. That would have been a big deal, right? You just want to stand. You just like standing. Hi. Here, let me take my headphones off. The headphones are in the way. There we go. Hey, look at that. Hi. Hi. Yeah, I see you go. He wants to walk. The loaded mouth. You mean when I'm like, oh, the loudest mouth gets the roast views. I see what you said. We got him these bibs that are like a cowboy scarf. He always looks like a cowboy. I think it's the cutest thing. Howdy, partner. Yeah. Yeah. You're a good boy. Okay, let's let you rest your head a little bit. Okay. No, I don't have boobs, sorry. No boobs. Sorry, no boobs. No boobs. Just dance. You could suck on this if you want. No? Okay. It's fine. She'll be back in a second. Should be back. Very quickly. Whoop. Ah, it's bouncing hard in the 5-year, ain't it? You know what, Marty? It's not even that it's like the loudest mouth gets the views or anything like that. No, one is that like you just want to come into it early to be the authoritative voice. But I think the other issue is that they kind of want, the algorithm favors somebody that's telling people what they want to hear, right? So if you're coming in and providing real value in the stock market, real value, providing people real value basically means telling them information that they don't want to hear, right? And so it's kind of this weird conundrum that providing your audience with the most value, it doesn't actually help your channel out the most. I mean, of course, people still realize the value to it and get the engagement and stuff like that. But when you're really going for like truly viral content, it just seems that the way that the YouTube algorithm works, kind of the truly viral content, as it pertains to trading and markets, tends to be the most useless. So, you know, there's only a few people, like Graham Stephan, I think, is a good example of somebody that he became popular, and so now he can provide that, you know, like they spent a lot of time talking about the Chinese real estate market crashing, for instance, right? So it's not a hard and fast rule, but if you're a small channel and you're trying to become a big channel and you're trying to like do it by quote unquote going viral, it's kind of hard unless you just want to tell people what they want to hear. Yes, babe. You ready to stand again? Oh, there you go. There you go. Yeah. Yes. Oh, baby. Yes. Uh-huh. Can you hear her making those little baby sighs? The baby sighs. Yeah. Oh. I mean, I don't feel like we have enough stability to pay patty cakes. No. But you can stand there like that. Yeah. Still coming back up there in the 5-year, huh? It did go quite a bit further than I thought. It did get all the way down to 27, but I think I was right to be a little bit weary about just trying to follow that trend. And though, I mean, I saw a lot of things saying that this is going to keep going, but I knew that once the meta order stopped, that it was probably going to get sucked back up really hard. I wasn't sure if the meta order was over or not. It looks like that meta order did. It took a long time for them to push through it, but then when they were done, it got sucked back up really hard. So that caution was warranted. You have to dumb it down and entertain them first and then hit them with facts. Well, yeah, that's another thing, is that I do need to work on making more engaging content. Yeah. You could use well, so Kaleem, I have a TikTok and I make videos on TikTok almost every day. Haven't been doing it as much lately. I don't know. The issue with TikTok is that TikTok doesn't really let you move your audience anywhere. So if you do anything to say, hey, go visit my YouTube channel or go visit my website, go buy my product or whatever the deal is, if it takes you out of the app, then it hurts your video. So basically you can build an audience on TikTok, but you can't take it anywhere else. That's a really big problem with TikTok. And so TikTok is doing this thing where Oh, what's wrong? So TikTok is doing this thing where it's starting to prioritize like more long form content in the hopes of bringing more business oriented customers in. But I think that you're going to continue to see them struggle on that fat point because you can't get your TikTok audience to click on a link and have a popular video. So I think that there's gonna have to be more changes at TikTok for my success on TikTok to translate over to YouTube. Because I've had some videos over there on TikTok, they get hundreds of thousands of views, right? Although those ones are often the non-trading related ones. Yeah. Your head's getting tired. You need to sit. Okay? Right here. Like that. True, but you'll be more recognizable. Yeah, and I'm keeping up with the TikTok. And when I think that it's appropriate, I post them here on YouTube too. So it helps. It's kind of an interesting thing because it's like really the thing that helps you the most in the long run are making good videos on YouTube. And we've made a lot of really good videos, but they're kind of on niche subjects. Now is the time for us to expand a little bit. Now, a lot of my beginning videos were a little bit general. That's why I think like some of these things, like how much money do you need to actually start day trading? Well, I think that could be a really good video, right? That one could help us pick up some traction. Oh, stop. But then I think we need to start, generalizing the audience beyond just day trading too. They were sitting out in the car because Asher wasn't ready to come in yet. He wanted to play in the car. So what a miss. Okay, a little bit of ziggy zag around here, but what do we got? We got like 5 minutes left. Sell them a get rich scheme. Nah. So like, here's another thing that I find really annoying is that my area of expertise is interest rates and central banking. And so we made some videos about central banking, and in particular, I made one about, you know, how to make money off of the news cycle as it pertains to the Federal Reserve. And the only comment that I got on that video was like, oh, what they say doesn't matter. I was like, you didn't even watch the freaking video, did you? And I didn't get any other comments on that video, and that video did not track very well overall. So maybe I need a different title and a different thumbnail and stuff like that. But it seems to me like that if you get online and you say, oh, the Federal Reserve is evil and it needs to be abolished immediately, there's tons of people that are willing to click on that. But if you actually come in and you say, okay, let's understand central banking and how we can use it to our advantage to make money, nobody clicks it. Because they just go, no, the Federal Reserve is evil. I don't care about them, right? So like you're fighting against this kind of. So that's where I think that on some of the more getting kind of like the general public sort of videos, right? Well, it's not betting against the Fed. It's betting with the Fed, really, right? Get rich betting with the Fed. I see what you're saying. You're suggesting the video name. Yeah, we could get something on that. I think that I said how to make money trading this. Well, I didn't say it. I shouldn't say how to make money. It was just how to trade the Federal Reserve. Yeah. Anyways, so I think that some of the videos that are more general that would be focused on would probably need to be more macroeconomic speaking, right? The coming slowdown, right? Will inflation abate? I do kind of, I'm kind of liking this idea of the models are wrong. I think we could make a video about that the models are wrong, that there is a fundamental problem with how we model inflation, because you know, and I think that Jean-Philippe is making a really good case that an agent-based model is probably the best approach for inflation in particular, because that's the only way that you can kind of model these dynamics of like employees demanding more money and then prices going up and all of these sorts of, you know, things, effects that kind of push each other. And then, you know, the effect of stimulus money on top of all of that. Yeah, so I'm looking at myself in the camera here. You can, because my beard is a little longer because I didn't shave this weekend. Getting a little gray there. You can barely, but it's definitely gray in the beard. I'm getting old, man. I think the titles for the video bring out emotion. Yeah. Keywords. I don't know what the right keyword here is for this. I mean, I think Federal Reserve is definitely a keyword that I want in that video, but I don't know what else. I don't know. I think that video can be improved, but I don't know. I mean, the thumbnail and title can be improved, but I don't know how to fix it. The average person does not care. Yeah, but so many people wanted to trade a year and a half ago. I don't know. Of course, now they've all given up interest on it. Market's down. Realize that they're not good traders and they give up on that. Pamela says the border is secure, but blames Trump for deterioration. Give me a break. Oh, have fun reading that one. Blow up their accounts. Yeah. We're gonna make more general content, and I think that the video we made about Gamma was a good video. You know, but we are also gonna have to move towards making more engaging content too, right? Like the stuff that I'm giving you right now is very academic. And so I think that that does work for a talking head video with maybe a few visual aids. But I probably need to get more into a video that is like, you know, really entertaining and lots of jokes and stuff like that, right? Rent a yacht and yeah. The whole thing is, I don't think I ever realized, especially not as a kid, how obsessed people are with status. Like really what it comes down to is, how do you decide where to focus your attention? If you know, if you're going to try and make money, how do you decide what you're going to do to make money, and what strategies you're going to pay attention to and try and so forth, right? And I think the answer is that most people look at what rich people are doing. That's the humans are social learners, and they say, I want to look at who's the highest status person and I want to play to them. So I was watching a documentary about the Theranos lady, right? And she surrounded herself with the powerful men like presidents and heads of state and stuff like that. And that was what allowed them to keep that scam going for so long, even though like their product didn't work. You know, people look for the hustle. And when you're on TikTok, if you do something that makes it look like you're rich, they zero in on it, right? And how do you make yourself look like you're rich? You got a nice button-up shirt with flashy colors on it and sunglasses and a nice car. Andrew Tate's got it figured out. I feel like when I do that with relation to trading, that I'm doing people a disservice, though. I mean, look, it's a nice room. It's not like I'm for money. Okay, but I don't think that sitting and bragging about how nice my house is an effective way to build my community. I know that that's the way that the algorithm works, but I think that if I build my community on that I'm ultimately going into a dead end. So it's better to go the slow way and make quality content that will really help people. Well, do you think that they could break the upside here in the treasuries? Because it's pushing really hard there. Well, I don't know. I'm going to have to leave you with that because it's time for me to go, guys. But I will see you tomorrow. CPI. Don't miss it. In the meantime, stay